What is good, y'all? It's Decrypt back with another video, and today I'm gonna cover time frames. So probably the number one most asked question that I get asked is, how do I know what time frame I'm supposed to be using for what, this and that, da da da. So I'm about to dumb it down for you guys. First things first, I say this all the time: the larger the time frame, the stronger the level is gonna be, right? So we already covered trend lines, trends. Not really trend lines, but trends, uptrends, downtrends, and then support and resistance. So levels like pivot points. Um, Basically, the larger the time frame you're on, the stronger the level is going to be. So obviously, you can see a resistance point here on the weekly time frame. So if we mark that level there, boom, that level is going to be a lot stronger than it like a level on the 15-minute would. Say for example here, how you see it rejecting there, there, like that. That level there is going to take less time for it to break. I think it took like a day for it to break, and then it finally dropped. Obviously, you don't want to just take a trade based off, a level there. You want to have confluences like fair value gaps, volume, and much more, right? But that's the first thing out the way. As the larger the time frame, the stronger the level is going to be, and the longer it's going to take for it to play out, right? So what time frame should you be using? Well, when you're marking previous highs, like so, boom, boom, and then all-time high there. Now you have the strongest levels out the way. So you know that these levels are super strong. As you approach them, price is probably gonna, if we're uptrending towards previous highs, like here, price is probably gonna get weaker as it gets there, right? And it's either gonna rip through with tons of volume, invalidating that sell-off level, or it's going to reject a little bit, come back down, retest, and then continue higher, right? So now, we broke this previous high here. We rejected it there. It came down, retested this, these previous highs after we broke them. So now we can move it to like this previous high there. And then we have like a weekly time frame, fair value gap, which would be a good indication or a good place to start buying on the dip, or adding to longs. That would be more like investing into regular, the S&P 500, dollar cost averaging, because you don't want to just buy at the top. There's going to be a retracement. You just have to be patient and then wait for it to come down. This area would be a nice area to add. This fair value gap here would be another nice area to add. If you watched the fair value gap video, you would remember that I mentioned I like playing fair value gaps on larger candles that break previous levels there. So this candle ended up breaking through. Boom. This candle, it did break above, but the fair value gap wasn't formed until, volume stepped in completely. Like, these big candles, that's a lot of volumes, a lot of buying. All right, so these would be good places to add. So if it falls below, no worries, add down here, dollar cost average, boom. That's more long-term investing. That's like the easy, baby, simple stuff. But day trading, how do you know what time frames to use? So once you start breaking these previous highs and you mark, you mark them, now you want to play in between them. So we're on the weekly time frame. You could go into the daily. You can start looking at trades here. You go into 4 hour. You can mark the 4 hour lows and highs. So say we just had a sell off, right? You could target these lows here on smaller time frames, right? So we're not just gonna keep crashing because we're in an overall uptrend. But if price decides to come down like it did on Friday, then you could target these lows here, right? You just target previous highs and previous lows. So I'm on the 15-minute now, right? There's previous lows here. Price ended up creating a fair value gap on smaller time frames, like 3-minute, 5-minute. Say like here. You see volume kick in, boom. Fair value gap here. Really, it was up here on like the 1 minute, but this works too. And then you would target those previous 15-minute lows, right? Because we marked the 15-minute low. We're on the 3-minute now, looking at a trade. So you just mark your risk reward there, stop out above the zone, and target these lows here. And then obviously it smashed it, right? Not every day you're gonna get volume like that. Sometimes it might take longer, but that was a good day for 0 DTEs. A lot of times it's not always going to be like that. You could have also played this fair value gap here. You could tell when volume steps in. Look how slow this buying is, and then all of a sudden it just dies. 3 minutes, same fair value up there. So if you missed this trade up here, you could have played that one there. You know, super simple. Always pay attention to the candles and what they're doing. So if you see strong volume downwards and then it's struggling to go up, you see these large wicks on those candles, you know, price is gonna tell you what it wants to do. You just have to be patient. It's gonna take time, you know, to get comfortable with the market. So I highly recommend joining a Discord and watching someone live trade it right in front of you, so that way you can, you know, follow along and see it work out live, rather than trying to figure it out yourself and making a bunch of mistakes and losing a bunch of money straight off the bat. You know, that's why it's good to have a mentor that's already made those mistakes and will prevent you from making the same ones, right? But that's pretty much it. You know, I like marking on higher time frames to, you know, find those magnets. Like, oh, we're above 459. We broke that previous high, so obviously price wants to continue higher. We're approaching 480, you know, so we can expect price to slow down, come down a little bit, retrace, and then finally push higher. You know, but we're not trading those levels unless you're swing trading or dollar cost averaging into, you know, shares. But, you know, once you're in between these levels, you could play accordingly. So, you know, we have previous lows here on 467. Well, if I mark this low here, let's see how well it matches up with the weekly fair value gap. Boom. See, it's like pretty much literally the same. So this would be a good spot to start adding. Daily low, 1 hour low. And then if it breaks that low, that would be a break of structure on larger time frames, and then it would start coming lower or pushing, you know, it would go into a little downtrend up until like it breaks a previous high. So it'll do something like this. It'll make lows, break below, go into a downtrend. So right up here is like downtrending, but it's not downtrending just yet. Until it breaks previous lows on larger time frames, then it'll start going lower. Boom. Right? And then once price breaks back above previous highs, it'll go back up into an uptrend, and you can start targeting those previous levels, right? So once it breaks structure, you're in the clear to short it. Once it gets back above previous highs like it did, then you start targeting 480, 467, 480, boom, right? And then I forgot to mention, when it's doing all that, the way you would trade it, like once you see price break structure here, boom, it starts reversing, you will start targeting these little highs and so on, right? Let me see if I can find an example. And I'm still on the 1 hour, right? So the larger the time frame, the stronger the level is going to be. So I'm going to start targeting previous highs on larger time frames. I'm going to use smaller time frames to play in between them. And I'll use the strategy like the fair value gap, supply and demand in between those levels, and use the larger time frames as like magnets, targets. Well, I mean, that's pretty much it. I always forget how simple it really is. I always forget about it until I start explaining it. But yeah, I mean, that's it. That's how you use time frames. The larger the time frame, the stronger the level is going to be. You obviously don't want to take trades on, you know, you don't want to take a 3-minute trade thinking that it's going to bounce on a weekly level. Like, you want to have confluences. You want to have the fair value gaps. You want to have, you know, the levels, the trends, break a structure, market shift. You want to have a bunch of confluences that price shows and tells you, hey, we're going this way. It's safe to go. Boom, take your trade, in and out, and, you know, make it back. But yeah, super simple. I'm going to keep uploading these daily, or as much as I can. I hope you guys are enjoying them and learning from them. But yeah, it's been Decrypt. I'm out of here.